And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. It's 5:30 a.m. and you know what day it is. It's time for it's CPI day. Those numbers are coming out right now and in line with expectations. I wonder if they're going to revise those and how that's going to affect the market. Let's jump in. The CPI for February was slightly lower than expected. Inflation rate as expected, and core inflation higher than expected. Okay, so that's not good. And then core inflation year over year in line with expectations. And the last one, CPI, the CPI, right? So these numbers are just coming out. I'm going to give you the first glance, my first interpretation. Before I even took notes this morning, I just started sipping my energy drink. And make sure you guys like and subscribe. We're going to give away some more free silver today. Half ounce Queen Elizabeth on the front, and then you got the coat of arms on the back. It is called the Battle of the Coral Sea. If you like and subscribe to the YouTube channel, and then just shoot us an email to info@bitcoinadvisors.com. I'm going to put the instructions right here. So like and subscribe to the YouTube channel. Email us a screenshot at info@bitcoinadvisors.com. We were giving away 10 last night. Only 2 people jumped in there, so it's pretty simple. Screenshot this to your phone. Send us an email that you liked and subscribed, and let's check back in a little bit later on the rest of this economic data and see who won. Who won a half ounce of silver today? It's not going to be hard. A lot of people are too rich. They don't need that half ounce of silver. Anyways, jumping on in here again. So I'm just digesting the data. The big one I was looking at was inflation year over year. So let's check out the Twitterverse. And what are they going to say here on TED Talks Macro? I really want to see what the Kobisi letter says. Kobisi. And let's just check in on the dollar and Bitcoin. Bitcoin popping off to the top side of the range really quick. And that was kind of my target right there at 25,790. In line with expectations. CME's not going as hot. And what is the dollar doing? The dollar having some volatility. Now remember, these big events like this, typically what happens going into the event, you're going to get an opposite reaction. So as you can see, wick down, and now we're popping back up, kind of front running this 618 target there. And with the 4-hour curled up like this, crossing up from a low level, and what do you have here coming back from this pivot? 1, 2, 3 drives of hidden bullish divergence, and I would expect a test of the bottom side of this triangle. Now, if we do close the dollar back above this region at 104.64, that's going to be a good indicator that we're going to do a little party on the upside with the dollar. Now, you know what that means for risk assets. And yesterday, the stock market did have a bit of a bad day. Again, revisiting our target off of this consolidation. We're looking for a move in the S&P down to 37.16. S&P futures popping up right now. The index coming down. I wonder if it's a different time frame. No, it's the same time frame. And the 4-hour. Again, as long as we are riding this to the downside and maintaining this trend line on the 4-hour time frame. And remember, why do we look at the stock market? Well, Bitcoin's going to do whatever the S&P and the NASDAQ do. So pretty much as long as we are maintaining this downtrend on the 4-hour, we got lower highs and lower lows. I'd expect more of the same. Additionally, I mean, it's hard to interpret what this core CPI inflation at 5.5% in line with expectations of 5.5%. We have collapse in the global banking system with 6% inflation. This is a costly fight against inflation. And now let's check in on the rate tool. CME. So now we are 79%. We're going to get 25 basis points on the first, 21% here. So notice how this has flip-flopped quite a bit. And if we go out a month or a few months, they're talking about, I think, rate cuts. So don't quote me there. November 23. Still 10% chance that we get up to 5% in a terminal rate there. June, May, and this is the one we were on. Yes, 79% chance of a quarter basis point rate hike, apparently. So initially, I want to look at what the dollar is doing here, and if this is just a little pump fake to the opposite side. On the day, hourly time frame is crossed down, and typically, the first pass at the green 55 is going to be a sell. This is a bit of an indecision candle, but notice on the 15-minute as we went into this volatile signal. So let's really think about it, guys. Is inflation coming down? Is inflation coming down? CPI says, PPI is tomorrow, so that'll have something to do with it as well. Inflation rate month over month at 0.4%, core inflation at 0.5%, and inflation year over year came in at 6% for February. So down from the 6.4, and are they going to revise it up, though, is the question. Is this just a fluff number? And then core inflation coming in as expected as well. And then nothing else. We got Fed Bowman speaking today. I don't know where they speak, but apparently they are speaking somewhere. And let's check in on the bond market, because that has been a bit of a harbinger of what is to come. And yesterday the bond market crashed. So bond market popping back up here with the slight gap coming in there. Could be a major higher low, and you will have a lot of bullish divergence on the daily time frame. If we do confirm this as a local low, I'd expect a big move up. 10-year. So why would the bond market go up right now? Bottom line is this, JP Morgan just put out a forecast for stocks coming down. S&P 2023. Let's see if this is it. JP Morgan cuts 2023 S&P earnings forecast by 9%. So I'm just going to bring it up again. At the last Fed meeting, S&P earnings per share, I don't see this Reuters article that says that we're going down to 3,200, but I heard about it yesterday. Insight. Let's see if this is it. But basically, the Fed says they want unemployment to go up another 1%, which is going to have a cascade of effects going across the board. The global economy is not at imminent risk of sliding into recession. That was January 5th, so that's not updated. I'll have to find that one for you guys tomorrow. Let's see what CZ is saying this morning. Mr. CZ. Still planning to buy some Bitcoin with his coins. Okay, not bad. BNB and ETH, some fund movements will fund around. Okay, so I don't see anything really standing out there. And who else? So real wages drop. Rise in line with expectations at 6% year-over-year. Jerome Powell just averted a heart attack. This buys him some breathing room on raising rates. To fight inflation, he needs to keep raising, but doing so risks more bank failures. And I did hear about more banks failing yesterday. So the question is it time to get bullish on Bitcoin, or are we going to get stopped out at this level? And I'll stick with my outlook from yesterday that essentially what we need to see is a daily closure above this level. Bitcoin is currently crossing up here, and that's pretty much my line in the sand right there. Let's look at all the daily time frames and essentially what we are looking for. Well, I am noticing this kind of trend line coming back from here. But really, yeah, we want to see a daily closure above that, call it these prior wicks. And then typically what happens if we look at the 4-hour time frame, where's the target on this one? I mean, we are getting a massive rip to the upside here. So, any kind of a 12-hour above this, a 4-hour even above this should be good enough for me. But what I'm seeing here is the volatility is just beginning to decline here. And so as long as we really just can't get above that region, you're going to expect that higher low to come in. And where did I draw this out yesterday? I posted it in our Discord as a potential. Yeah, there it is. So that's the line. 25,827, give or take a few bucks. But at some point, I'm expecting a higher low to come in. We will cross down with any kind of a closure below 25,080 bucks. Momentum will cross down from a high level, and then we will see what the downside move is going to look like if we do perform a higher low. So we're getting a higher high on the 12-hour. That's a good sign if you want to be bullish. Essentially, we just don't want to see the any kind of a massive drawdown in the next day or two. So inflation came in. Inflation came in, again, to just go over it, at 6%. Core inflation at 5.5%, in line with expectations. So, guys, I don't believe it. I mean, inflation's not at 5 or 6%. We know it's much higher than that. So it's just a matter of time before the recession comes. So, yeah, we could blast off and fill the gap on the CMEs all the way up here at 28 to 30,000, but as long as we are making lower highs on the weekly, I mean, we're pretty close, but as long as we're below this region, it's still potentially game on to the downside. However, if we do defeat this region on the CMEs at 27 to 29,000, then we're talking about something totally different, and perhaps that bull run that everybody's been waiting for is going to be here to stay, and they're just going to turn on the money printers again, and everybody's going to figure it out finally that Bitcoin is digital gold. Bitcoin is better than leaving your money at the bank. It's obvious, it's more than apparent that these assets at the bank are not safe, and you're better off having some gold and some Bitcoin. So again, don't forget, like and subscribe, share the video, come back for tomorrow where we will check in on the PPI. I hope you have a blessed and highly favored day. Take care. Signing out.